It's the 30-30 list, where we're looking at the top 30 momentum companies on the ASX, those with the outstanding performances in the last 3 months, and those that are in the launchpad, which is quite often where these momentum leaders come from. They show up in the launchpad first, and then they start to take off. This is a list that we share with Gary on a Thursday afternoon, and all members get access to it, and then they can send through their requests so we can discuss them today, which is what we're going to do. Gary Glover's been through both lists, pulled out the most interesting charts, the thematics that are looking quite big to him, and then also some learning lessons that we can look at to see, well, how do the best leaders set up or what to look for in the next leaders? Good morning, Gary. How are you?
Yeah, I'm pretty good. Yourself?
Well, we've had the inauguration of Trump, and I do know that we'll talk about, in between the momentum leaders and the launchpad leaders, the top themes. So we've definitely had a quick shift, very rapid shift, with how fast he's moved in and signed a lot of things into power and made a lot of tweets and announcements. So we'll see that in the charts. Is there anything that stood out to you in this top lot of momentum that you've seen today?
I saw the sector brief that you have. That probably doesn't. The top 30 here doesn't probably do that list justice. In some regards, the top 30 seems to be quite broad here. There's a real mix, and you've sort of got uranium, gold, critical minerals, lithium, your technology, financial, super. I guess what that list is predominantly small. So a lot of smaller names, smaller share prices. So when I look through a list, definitely a lot of smaller. So lots of pops in those smaller names. It was interesting. I was trying to look for, I've sort of got quite a few clients in some broader based sort of funds there. So some clients who just look at like LICs and managed funds there. So I went trying to get some different exposure there. So small caps have been really out of favor for a long time. Then maybe that's the sector to be looking at. But when I looked at all small cap matches, it was, what is left to right? They're going down, so it wasn't left to right going up. So it's like, I think I just didn't see anything positive at all about those momentum in any of those small cap managers there. So I know we're getting a few pops there, but small caps are still, the sector's still not performing particularly well. So look, maybe that will change here. But that's a byproduct of actually inflation, Chris, as well. We know that small caps and growth and risk there is sort of less attractive in those high inflation periods. So inflation's been down for a while here. So you would have thought you might have seen a bit more uptick in those smalls, but so far we haven't seen that. But struggle to see any of the small cap managers performing it, the share price moving in the right direction. And that might have only been one there, might have been consolidating. The rest are all basically putting sharply down here. But on the list there, number 2 there, NIM, I just thought this is kind of interesting there because it sort of did have that little kind of smaller name here, but it did have that little bit of a jump there, Chris, and a little bit of a congestion under the high. Just that, see how we sort of saw some good volume through here, just that pattern there. And then we had that little 3 or 4 day congestion, no selling there, and then it popped through. Just that little David Ryan sort of pattern there. That was probably the most interesting thing there, but still pretty loose there. Definitely got a little bit extended here and sort of sold off here. So it's probably not one that I'd be following there, but I just thought that was interesting.
Kind of congestion under the high. That's always it.
Yeah. 3DP, another sort of small one there. Again, look, you had some volume come in here, so that was really powered through there as well. So this one probably just for me just goes on the watch list. So quite a few of these ones, those smaller names there, they've had that pop. Some of them haven't had really good setups there, just gone straight up there. So the main thing there is just to sort of put them on the watch list there. I think PUA is sort of another smaller name there. It's sort of too small for me personally. I think ETN was one here. This one's had a pretty good run here. Again, too small here for me, but maybe it'll congest here. There's been a little bit of selling here so far, so it's not ideally what we want to see. So again, they just go on the watch list there, just to watch them there. But and again, like this one here, I think this was on the watch list a couple of weeks ago there, because I think the PTO had that sort of strong jump and then sort of had consolidated there. The thing about that consolidation was that you didn't see much volume through that. So pulled back. I think it came back to the 20, then sort of held there. And it actually went to the 20 again, had some okay volume, and then it pulled back again, no selling as well there. So that's probably the most interesting sort of setup, was that it came back and hugged that 20 there. And then this day here might have given me a little trigger there as well. The thing is sort of got your, it's almost like showing a VCP. And then you get, for me personally, I like to see the B wave break here. So I wouldn't have been entering this until I saw it break that little high. So that's just me. That's sort of my rule personally. But again, pretty small here. I'm trying to trade, stay away from the sort of 30, 40 cent stocks. I sort of want to be sort of trading over 50 and a bit more liquid there. And main reason is for two reasons: liquidity and also percentage moves as well. If you're trading a 30 cent stock, 1 cent, is a pretty big percent move. So it's hard to sort of get, if you're going to try and build a position up there, it's so hard. A standard term move can really break the bank. So,
and it throws your averages out dramatically if you sort of get through 1 or 2 price levels, and they kind of go your averages for the month. And
yeah. And then if you're only going to trade them on a small basis, then that's why you should trade them. But it becomes more difficult. I just find to get chopped up there, and it's sort of just harder to control my risks there. I just kind of I battle with that emotionally there, just seeing those percentage moves and choppy, and one good day and then it can chop back the next day and then recover it again. So almost like this, like trumps of the market making comments every day that the market's going back and forth. So small caps are like that every day. So you need to be able to sort of withstand some of those moves there. But GCM was sort of interesting there. Just because I had that little pop there, congested, and then did break through here. So maybe a 52-week high. Some pretty heavy volume through here. There's still pretty strong volume, Chris, as well. It's too small for me personally. It's a very, very small name here. So I wouldn't go near this personally, but that's pretty chunky volume. So it's probably one to sort of keep an eye on, see what eventuates there. FXG, you can see here so far, they're all small names there. Even FXG as well, number 9 on the list as well. So you did sort of have a pretty, this is impulsive. That's pretty correct. It's come back a bit deeper than you like, so that's not ideal. It's then sort of had an impulsive move again and then pull back here. What this did was sort of stay in the top half, which is what I like. I like to sort of see it, stay. And then it actually ran up here and then congested again. So then, therefore, you start to get your VCP. And then really here, this day here, you get a B wave break here. So that's the sort of setup that if I saw that on, it was a 50 cent stock or above there, that's exactly the type of thing I'm looking for. So looking for something that's trending up, going up impulsively, pulling back corrective, impulsive, corrective, and then whatever stays in that, the consolidation stays in the top half of the chart. And I think it's starting to look good there. And then you're hoping for this sort of stuff here as well. So I think, just talking about, seeing how NEU has had this is a bottom here. Like, I know you can say this is a bit of a washout, bit of a screen there. Hard to sort of just trade those, so it can sort of fail there. But this has had a nice bounce here on pretty good volume. So now you're sort of hoping for this to drift back, consolidate, and do some sort of consolidation there where it builds a first high low and gives you a safer entry there. So you got the sort of character change happening there. So that's sort of that's what you're looking for. You're looking for that sort of character change, jump and then pull back and then jump here. The volume comes in, and then you're looking for that sort of consolidation, looking for that tight consolidation now. So that's why it's sort of, if you see those impulsive moves going up strongly and good volume, you kind of wait for the consolidation. That's the sort of safe entry. So sometimes you just got to be looking for those down the line a little bit. MAP, I thought was interesting. There's kind of lighter volume so far, but has been a nice little trend there. Finishing and sort of see what follows here. So this is just sort of one to watch. MEK MMP. This is money me actually kind of talking about this yesterday, saying it's an interesting company there, sort of some interesting fundamentals here. So that's had a nice little run. That's been sort of been running up okay. It's still a pretty small company. I think it's sort of not making any money, Chris, but it's just about to approach sort of that break even sort of phase there, which can shift there. But look, it's had an okay run here. I probably want to just watch this one consolidate.
Funny you mentioned that. I was talking to a trader this week about exactly that. When a company crosses over into the profitability, and he was working through sort of a bit like your model book. He was looking at the best performers over the last 4 or 5 years and analyzing their point of inflection where the chart really took off. And like you said, he noted, look, they've probably already hit 52-week highs. He says, look, they've already got up 100%, but if you're going to go up 400 or 500%, you've got to do 100% first.
Yeah.
And his point was that whether it's a 52-week high, the 100%, often that point of inflection can be when they turn to be profitable. So like minute is the earnings, the margins becoming profitable. And the conversation just ended up concluding that that can be a great aspect because it then means it's a viable candidate for many fund managers to add into their universe of possible trades.
Yeah.
So the amount of capital that can be invested in that company, the doors are suddenly opened. And us as momentum traders, if we identify that, just like you're saying, on the verge of profitability, we can ride that tail wave as the floodgates are opened for others to be allowed to trade that same company.
Yeah, I think 2 companies come to mind there, sort of like 360 and Xero in the last couple of years that have sort of hit that, break even sort of, mass market appeal, but then not making any money, but then also they sort of tip into that point there. It's funny actually, sort of, I know Deloitte's, they do have their models and stuff where they look at how long it will take to get to profitability and the pace of it as well. So they're almost trying to get in front of that curve. So which stocks are going to get there fastest. And then, because they're obviously identifying that same thing as well, that once they get pretty close to break even, that's the point where they can accelerate. From an earnings perspective here. I thought OCC was an interesting chart, Chris. This is orthocell, which is in that stem cell area there. But again, it's had pretty good drive here. It did have a bit of a pullback there, some pretty heavy selling there, which is a little bit negative there. Did sort of bounce again, and then kind of again it sort of consolidated there, and there was some reasonable selling as well there. So it probably didn't look that great there, but then it tries to sort of bounce here and then consolidate there. It tries to go down, and you do see the volume start to sort of drive up there. And then you sort of think about that, that's a VCP in there as well. You sort of got a pullback, second pullback, third pullback here. Once you break through that little right shoulder there, that's, breaking through 138, that's probably that's a little B wave trigger for mind here. So even though this didn't, sometimes they don't look perfect. Like this looked like there was quite a bit of selling in there after such a strong move. It had gone from 60 to 160. So you think, be a level of profit taking place there after such a strong move here. But this has gone again here. So sometimes it mightn't be, looks like there's heavy selling there. But at some stage, that was probably the only day that really kind of wavered a little bit different. Sort of like, it didn't follow through here, sort of held tight, and the selling was less aggressive than any other day on the down, sort of pushing down. So, we're just interesting there because that's, one thing I mentioned to you, that mesoblast and that sort of stem cell area there, that one approval there could just open the gates for that sector there, sort of longer term. So it's definitely a sector that I'm keeping a close eye on. I'm watching mesoblast as well. It's in a bit of a consolidation phase at the moment. So I'm hoping that'll come back to the 50, maybe consolidate there and maybe just use up some time here after such a great run. What else we got? The MEK was one that's sort of smaller now again. So did have a VCP in here, sort of had that strength. Pull back here that looked like a bit of volume there. And it ran again. And it pulled back in here. The volume did sort of dry up in here. See how the volume really dry up there. And then we did break through a little bit of a B wave there. And the key there was that volume was pretty strong. going through the B wave. That then has gone higher here as well. So this still looks pretty positive here. It's good volume there. It's just too small for me, but that's a good little setup in there. Good little VCP. Where's AZY? Wrong code, AZY. This one here's had some pretty good volume on that drive here, and pull back there, a bit of selling here. It's, we've had a bit of a drive again. Potential little cup and handler here. Do like the fact that we've had some pretty big volume there. Just, I don't like the fact that it's again another small name here. Just this list is just littered with small caps and smaller share prices there. So that itself could be telling us a little bit something too as well, Chris, is that, normally when the smallest names are popping there, normally the big moves start with the big caps and then filter through the big caps, and then the last ones to move are all the small. So, market's had a pretty good run here. I think indexes are gone back up to retest the highs here. So it might be an indication of where we are in the cycle as well, just saying smallest names pop. And what else? Last one we got there was CYL. It's interesting here because obviously this has been a pretty strong stock here. Did break the 50, got a bit volatile there, so a bit negative there. And again, we're seeing here that this is the first pullback, this is the second pullback, this is the third pullback there. So we have got a VCP. So, that sort of stock there, as much as it's had a pretty strong run, that's still that pullback there, still sitting high in the range here. So I can still go to can pull back and go to a new high. That's a really impossible. That correction is what, it's probably only come back a third of the range, or maybe even less than that. So it still is in a pretty strong position there. What did happen was you got a little bit of a rally up here, and then a bit of a pullback. This might have been a little bit of a B wave break in there. That would be my first time I would look at something like that, and then I probably would have been adding to it on the break of the next sort of lower high as well. So it's why sort of these sort of stocks that have showing relative strength, you want to see them sort of coil up here, and this definitely did that. Whole thing tightened up here. This is a Minavini sort of a Kalamagi type of trade there, looking for stronger names, having a bit of a breather, tighten up, and popping again. So this looks all right here. This is definitely one worth keeping a watch here, because now we're sort of gone back up to the high. Ideally, we could love to get a little handle in here, Chris. Well, but so definitely one that I still keep an eye on that. It looks pretty strong. So that's our momentum list.
Well, you've covered most of the requests. There was only one left. EBR Echo Bravo Romeo. And just while you bring that chart up, if anyone's wondering about VCPs that Gary's talking about, and we love them, and they're great trading setup from Mark Minavini. We'll put a link on screen for an in-depth tutorial of all the criteria and how to run through, and a lot of case studies and examples. But EBR, you've now got that on chart, Gary. What are we learning?
Yeah, actually, I did actually circle this one. Actually, I missed it on the way through because there was a little high type flag there as well, Chris. So, again, this has been pretty strong here, gone sideways. Even this is kind of like a corrective pattern there, and then it does sort of, does do a B wave break here around that, just under the dollar, and then kicks through there, and then does go to a 52-week high, which is again another confirmation of being pretty sound here. But the key thing there, what kind of went up here in a good volume there. There was really not much selling here, only the 1 day down here, but which ended up culminating that being the low here. I think the next couple of days tried to bounce, didn't go too far. Next day down was very, very light volume. So the selling sort of here did sort of dry up here. And then you've got this little flag here as well. So this has gone up, fairly large percent here. And then you've got this little high type flag in there. So again, you always get the 1 day. Oftentimes it'll be the first day off the high, you'll see some selling, but oftentimes there's only just, if it's going to stay pretty solid, there'll be 1 day of selling only, and all the rest will be pretty dry. I'll be pretty, see how then those 2 days down there, no selling. This day here, no selling, and the whole thing just dries up here. So once it comes out of this flag here, looks pretty good there. Again, the only thing I would do if I was trading that is that I might break the half hourly down, and then I'm looking for like a little B wave break in there. So this might have broke here somewhere around $1.41. Did edge back here, but if you bought this with a stop maybe just under here, 10-cent stop here, that's still pretty risk reward if you think it's going to sort of go back up and keep running there. So, but yeah, look, probably looking a bit extended here now, but we know that they can keep going, Chris, as we know. So volume's still pretty healthy. You would just, I would sell some in the heat, move my stop up to break even, and then we'll just start trailing this one in here or something. Or maybe this one here is so vertical here. He's saying that so far it's over the 10, so maybe the 10 should be your stop there. That looks quite good there.
Well, it's a good way to trade EDR at a nice high-end type flag. You mentioned earlier looking and seeing there are a lot of small caps in this group, and definitely that's the case. And then you also have mentioned a report that we share together, which is looking at the leading themes within the top momentum companies and the top launchpad companies. And you're absolutely right. There's a lot of small companies in there. But if we bundle them together and get an idea of, well, which themes are behind these small cap companies? When we look at it from yesterday afternoon, we had uranium that was both a momentum leader and a launchpad leader, which is rare.
Saw that. Yeah.
That's rare. And there's normally a solid news-driven event in the individual company that does that. It means that it's just hard to trade. We could say it's a news-driven event kind of with Trump's just change and that change of focus, Inflation Reduction Act coming out, and then different announcements going back for North Sea oil, that kind of thing. Still asking. So those
things. Paladin had an update during the week there, Chris, actually, where it did show that cash receipts are up quite a lot. So they're, which kind of made me think about obviously we've got the Aussie gold producers are doing pretty well at the moment because the gold price hasn't really moved up that much, but the Aussie dollar moving down has really fueled that, their costs are what, 2,000 or 2,200 an ounce, and now we're up to like 4,000, 4,200 an ounce in terms of Aussie gold terms. So it's more the currency is actually really making it more profitable for those, and it made me think, maybe there's other sectors there that other minerals as well are going to be so if you're digging out Aussie uranium and the uranium price is still pretty robust and that dollar's going down, you're getting better return on your money there. So when I saw that Paladin, I thought, I wonder whether that reflects
domestic production versus production.
Yeah. So if you're digging uranium out of Australia here, it's probably going to give you a little bit of sweetener there with that currency. So I thought the cash receipts was a nice jump in the cash inflow for Paladin. I thought it could sort of carry through there. I did notice quite a few of them. I think BOE was up the most. It had a nice jump there. So yeah, definitely saw that sort of that sort of news there. I think made everyone think, maybe these guys are producing, got a greater inflow in receipts than we anticipated.
Yeah, that's definitely part of the reasoning why we split the sectors and the groups and the themes in the way that we do, because as you've mentioned there with gold miners, we've seen this before. The gold price might edge up a little bit. The international gold miners reflect that, but the domestic miners shoot the lights out because their labor costs and input costs are very much Aussie dollars, but their income's just going through the roof. So we do slice and dice it a different way, and then also looking at the states, because if you have a cyclone on the west coast that destroys the port and stops the export, then that impacts the earnings. So then you go, well, let's go to the wet east coast and see who's getting it out that way. But they're really important, and that's why we look at the different thematics and overlay them, gold miner, West Oz, whatever. The other ones are for momentum leaders, gold miners, the producers, so those that are already producing. They were ranked third. And then within the top 10 or top 5, actually, there was a crossover of medical scanning, radiology and imagery companies, which before the conversation, you were talking about the AI and actually how you can cross that over to being a better trader. Other insights, West Oz miners, there were 34 of them in the top 200, and then 38 gold explorers in the top 200 momentum as well. So exactly what you're saying, Gary. Well spotted and what you identified. And just on the launchpad, the strongest themes in there for this week: software companies with 29, IT services, 13 companies, online, 18. And we also have some African miners, IT services, uranium once again. They're the strongest themes in the launchpad. So with that context, that overlay, and knowing that uranium has topped both lists, I'll hand it back to you to sort of share with us what you're pulling out of the launchpad this list this week.
Yeah, look at that launchpad there. I think E25 was probably one of the just one I was looking at there. Again, a bit of a smaller name there, but has had that impulsive jump and then kind of rounding off there, but still pretty choppy there. So I've got it as a lukewarm watch there. Thought Liontown was pretty interesting there. It's had a pretty good update. Making a bit more money than again the market anticipated as well. So again, currency might be coming into play a little bit as well, for Liontown, but also, I mean, the price is pretty low here, but they are, I think IGO and Liontown that have sort of shown to be, lower cost producer on that side. So it just means that they're, when the dial does turn here, they're going to advantage the most by keeping it pretty lean and mean here. So as much as they're not making a ton of money, they're still profitable here, even though we got a pretty soft lithium price there. We're seeing just a little bit of an uptick in the lithium price as well here. Well, started to see a bit of volume there, Chris, on hello stocks, and starting to see a little bit of an impulsive move. Come back above the 50 here. Just needs to sort of consolidate and try and start to build here, but okay signs there for that sector there, and some of those sort of stronger names there. I think IGO was sort of something similar as well. Just maybe not as impulsive as LTR, but maybe building there as well. LAC was next on the list there. It's funny, I did actually sort of see this there because it sort of had some okay volume there. Broke a couple of swing highs on the way down here, so a bit of a change of character. But then it's really gone through a bit of a basing pattern there. I thought this might have actually started to break out here, but what it did was actually break down, and then it did come through here again. To me, I would have been looking at maybe like a B-wave break here, but again, it went up, and then it come back out, washed out again, and now it's gone here. So being pretty messy, pretty choppy, this one here. And that's the sort of, that's the downside of trying to buy the, stocks in the bottom half as well, because they tend to sort of stay there for quite a while there, and they do need to build a bit of a base to get out of there as well. So it's just the hardest slog trying to make money in the bottom half, but it's just breaks it down in recent years. They're trying to play in the top half. Stocks that have been trending up for a while. They just keep trending, keep on being able to sort of keep trending there. So this one's a bit of a change of characters. It's now sort of broken above here again. So good signs there. But to me, I'm just going to watch this one here just because it's been pretty choppy here. I haven't traded this one here, but if I had there, I probably would have been chopped up based on the rules that I put in place. But it's okay there, but it's done a lot of work here. I'd sort of might be a little bit like ResMed there, where it sort of might take 3 to 6 months to build the base before it gets going. So let's let it build something robust there, and maybe it'll give us a low risk entry after a bit of time there. So
well, that's a prime candidate for some research that you and I've discussed many times before, which is why we look for the top half, because if the company's in the bottom third of ranked sectors and their charts looking like that, statistically, they will spend twice as much time down in that bottom half than those that are in the top third, or the bottom part of the chart in the bottom third of the rankings, and as the top third. And it kind of doesn't make sense from a maths unless you actually think about it and think, well, what you just mentioned before, if you've got a momentum leader, they'll run up, they'll pause, which means they'll then move down into the middle third of the market, and then they'll get back up into the top and run again. Whereas the bottom ones, like you said, you thought it was going to break out, but then it broke down into December. And do you find that's kind of stereotypical of this kind of basing pattern when they're in the bottom half?
Yeah, I mean, like, even if you look at that strongest names, I mean, I sort of been looking at I-88. So that had a really impulsive move in July. So it's had joined the 100 club there. and then it's consolidated. So that's been like July. So that's been 1, 2, 3, 4, 5, 6, almost 6 months to consolidate before it's actually popped out. And we know that, these consolidations even on the stronger names can be 3 months to maybe like 7 or 8 months. So those are the more bullish consolidations. Can take that much time there. So when you're sort of building a base out of the low there, then they can take a lot longer as well. So it's really, I don't mind to look at the LSC there, but just that you look at that longer term chart there. Yeah, it's pretty nasty. It's it's a big AVC down here. There's big volume down here. So there's signs of accumulation taking place there. That's interesting in that regard. But maybe the weekly is sort of saying here, this is, breaking above 970, which it probably has just done here, 970. But that's probably really that. If you just wait for that, that might have been you might have, missed all this consolidation here for the last 5 or 6 months there. So, you want to sort of see some sort of signs there. But I just know like bases can take a long time to build here. So that's why I want to be sort of trading in the top half, because sometimes those bases can be probably a lot longer. Next on the list there was DUG. Again, it's had a pretty nasty trend here. Just probably, possibly a change in character here. Broken above a couple of swing highs here. Still a pretty nasty downtrend. So it's an avoid for me, but just one to sort of keep an eye on there. Possible change of character there, but it does roam and that it is sort of happening at this time of the market. CXO is a no for me, pretty messy. Still lots of losers in front of it. NXG was sort of just a watch for me. This is a sector that's been pretty robust. This was a bit of a leader in the sector. So it's gone through a bit of a consolidation here, Chris. I'm watching this one here. I'm hoping we might get a little bit a larger VCP here. Maybe the whole thing will tighten up. It's just a little loose here at this stage. It's had a good run and it's pretty volatile there. So I'd like to sort of see that tighten up there first. So maybe it can consolidate there. Maybe this can build a cup and handle here, but it's just not the favourite sort of setup there really. It's got a bit of risk there at the moment. PPS. There's a sort of premium there. I mean, this is quite a good setup here. I mean, I looked at this and thought, wow, if you just waited for a little B wave break on this one, there's a B wave break here in September. There was another B wave break here in October. Another little B wave break here in November, and now we've just broken a little B wave break here again in January there. So it's been trending quite nicely. Even though this has probably come back a lot there, the whole thing has just sat. See how the whole thing just sat on top of the previous highs there. So it's been a nice sort of strong trend here, and pretty robust. And each high is just sat on top here. So that's a little bit. That's probably the only negative sign I saw here is that does look like a distribution day after such a strong run here. It's funny that PPS there probably coincides with Hub here, which anyone obviously this that sort of wealth management area, but this was a potential EP here, Chris. So it did actually have an update. I didn't
Day one yesterday too.
Yeah, so had an update Tuesday there. So you'd open at $70.65 and get as high as $75 there, and it has gone to $76 there. So, those episodic pivots there are good news. So that was pretty interesting there, because it's sort of, they say as long as it doesn't jump up more than 14%, if it sort of jumps up, 5 to 8% there, that's probably the right type of window to be sort of buying them in it. So did tend to have that, has kicked on there. So it'd be pretty hard to most people to try and buy that good news. But that did give a nice EP there, and it did fit the right criteria. It was interesting that HUB, because when I saw that news, I thought to myself, the sister company, Net Wealth, which is on the list as well. So these Hub and Net Wealth are both on the list there. It had the jump as well, but not nearly as much. I thought, well, this is going to...
It wasn't its news, right? It was running off the back of...
It wasn't its news, but it's still an AP, because it's essentially the same. It's the same. It's almost the same news for them. It sort of tells them how well, If these companies do very, very similar, one does very well, most likely this one can do pretty well as well. So you could have bought this as an EP, even though it wasn't usual as. So that was my first thought, was to actually buy Net Wealth rather than Hub. Hub might go too hard, and then Net Wealth might be the better buy. So that did open at 27.85, and it's gotten to 32. So it's had a pretty good, nice move there. So if you study those EPs, like even the chickens, which is what they say is the worst ones there, they tend to rally sort of 3 to 5 days before they fail on the EPs. So you can still sort of trade. You know, so you thought this was, I mean, to me personally, if I was going to trade this, I'd be, this goes to Mark and I'll own it straight out. So, 1, 2, 3 days there, that's a nice profit move on. So I thought that was a good EP. And that's where sometimes if company is really close to another company, if you see good news like that Paladin news affected the whole sector.
You said BOE as well was.
With also everyone thought, geez, that uranium prices have improved here and cash receipts, and that is a big jump in earnings and cash flow, and that potentially can go through the whole sector there. So sometimes single companies' news can actually create an EP for other stocks as well. It's not something you see too much of there, but if there's so much similarity within companies there, I think Hub and Net Wealth are, they're almost identical companies there as well. And you think about banks too. I mean, Westpac and ANZ, pretty similar. If there was a really game-changing news to that sector on one of those companies, it's probably going to affect them all.
Yeah, if one of them comes out and saying, look, they're increasing our bad debt provisions.
Yeah.
If it's residential mortgages, you can easily cross-reference that to the other piece, to the percentage of their earnings that are related to resi mortgages, and then it shows through on the price.
Yeah. No, that's exactly right. So you can get those sort of episodic pivots there, sort of. Yeah. Well, so I call it, I have my own classification. I call it the game changer.
Yeah.
So I'm looking for sort of game changing news. So that basically the market hasn't identified it. So I think in my head I think this has changed the game. The market doesn't know this. That's kind of how I trade it there, and I trade it on the same basis as an AP. I'm aware of, I've got my chickens, ducks, and swans sort of profile there. I've got my rules around understand how they, how they typically perform, and I know if they open up more than 14%, I shouldn't buy them. So I should open it. Yeah, have a certain window there. So it's sort of good to have your rules around there. So it's painful about rules, Chris. They're sort of like before I finish this one here, that I've been reading that peak performance there, and just talking about ways to improve on the job. So it's really around your mindset there, and like they've shown there that anyone can improve. It's more the right training there. So obviously people playing their limiting beliefs, genetics, like I can't get any better. I'm not creative enough. Whatever it is. Some people think, we just keep doing the same things over and over again, you'll get better. Or if you try harder, you'll get better. But it's really got nothing to do with that. It's all been proven now that it's the right type of training, and it's that deliberate practice there. So, and what I found quite interesting was in the medical area, in particularly sort of radiologists, they found that like radiologists were just looking at charts, sending them off, and they never got any feedback. No one ever knew whether they were right or wrong. No judgment. So the radiologists were really getting. There wasn't any sort of testing on the training for it. They did their training for 4 years, and then you hope when they left there, they did a good job. But then they found that some radiologists were really good, some weren't really good, but they couldn't really measure. There wasn't any way of sort of measuring moving forward. So it wasn't until they designed like an electronic library, had like 300 or 400 sort of subsets of pictures there, and they trained. So they had, I think they had 2 things there. They had like a mammogram there for breast cancer, and they also did one in the States there, which was around kids with broken ankles and stuff there, and had 234 scans, X-rays. They had the family history there, for the child there, and then they taught people, okay, that you had to basically identify whether it was a normal break or an abnormal break, and obviously it needed more analysis there. And by sort of having this massive library and a bit of a feedback tool, so once they sort of go through 20, 30, they could sort of start to work out which ones were normal breaks, which ones abnormal, which ones led to, and it was building that library there, which sort of changed the game as to how radiologists were able to improve and stuff there. It's a bit, we mentioned, talking about the Top Gun training there, how, for years, I think the Navy pilots went, they're having a pretty poor success rate, in dogfights with some of the enemy there, when they were training there, to the point where the Navy basically changed the training. They brought in more flying and more tactics and analysed all tactics, and they recorded on video. So really had that deliberate practice and really pushed the edges and got the incumbents uncomfortable. But that, by the end of that program, they found that if you won one dogfight, you're more likely to win the next one. And then once you won 20 there, you literally, you barely ever got defeated. So there was deliberate practice there, but it just made me think about, with those digital libraries there for radiologists there, that really changed the game and really made them improve. So it's kind of, as a trader there, we talked about the model books, those sort of stronger stocks there. But even if you're gonna, if you're gonna build a playbook of how you trade there, you really want to get better. It's not, yes, you'll get some knowledge from us here, and some opportunities there, and we're identifying some of the things. You are, as Chris pointed out to me, you are learning from someone who's reasonably experienced and trying to use that knowledge there. But you'll learn more actually by building your own library and studying that library, and then actually trading sort of subsets of that library, and then using that analysis to go back to your library and study that as well. So you'll need to be more deliberate in your practice there if you want to get better as a trader. That's going to be how so pick a style, pick some setups there, build a library of that sort of setup, then start trading that setup, and then making notes and analyze each trade you do with regard to all our setups, and just keep building your digital library up of that particular setup there. That's obvious that the way we're going to improve there. If you look at how deliberate practice and peak performance sort of works there, it's a great book, that Peak Performance. It's like chapter 5, 6 there sort of covers some of that. But it's worth a read there. It might change your mindset on how you actually, because it sometimes you think, I'm trying so hard, it's can't make money. That was probably me. Actually, I was pushing too hard there. But if the practice is deliberate there, just draw yourself, make your program, your process a little narrower. Just sort of focus on a style there, and then just sort of fine tune that. Is kind of, that's how the deliberate practice sort of works and stuff. There are principles behind it. So it's a really interesting area. It's definitely one that I would like to get. If you're a trader who wants to get better, I'm pretty sure that's everyone. But I'd read that book there. Now I'd start to sort of look at how you can make your practice a little bit more
specific, deliberate focus.
Yeah. I mean, I know you've read that book, Chris, as well. So you know the value of that book as well.
Yeah, definitely that book. I've read a few. That got me into reading a fair few books on similar topics, and then the academic papers and studies that they were referencing. And like back to the industry side of things, you and I have discussed this many times, that the best traders in the world, and the ones we talk about it more are actually day traders, where they'll say they learn more about reviewing their own trades. And you and I have talked about that numerous times. But on the deliberate practice side of things, the part that I found absolutely fascinating was that those studies were then overlaid with some studies that came back to when they dissected Einstein's brain. And Einstein's brain was notably different to most other brains that had ever been dissected, in the sense that there was this huge amount of fatty tissue around the neurons, the synapses, and how our brains work. And those fatty tissues are called myelin, which is the insulation mechanism that goes around a cable. Think of like a power cord to your computer. It's got the plastic coating around it. And that myelin is fatty tissue that we can train. And what you're talking about is the deliberate practice is when we go through deliberate practice, and we must have that feedback loop that you're talking about, and to know what the radiologists were good or not. The shorter the feedback loop, the better the exercise. It's like weightlifting in a sense. So to build that fatty tissue and get better at a skill, like identifying trade setups like you're very good at, we need to be building that fatty tissue. And the way to do it is to do repetitive learning, have the guidance of a coach, and do the deliberate practice. And the one example that I used in the studies that was actually going down to the academic studies was people playing violin or musical instruments in general that they were focusing on in this study, violinists. And it was when they go over the same bar of music and they'd get it wrong, and then they'd play that same bar of music again and again and again until they got it right. But the benefit was they had that feedback loop immediately. They could hear it whether the note was right or wrong, and they had enough encouragement to be told how to play it right. They could listen to an expert to hear how they played it correctly. They were well trained enough to hear the notes themselves to know if they were right or wrong. And that's all just coming back to the model book side of things. You've already done the work. You've analyzed the chart. People can go and look at the chart themselves, try and see the setups, and then use your model book to then cross-reference and go, oh, that's what I should have identified, or that's how he interpreted it. So this is something I've spent a lot of time researching and studying, and I love those books. And I love that you put the work into the model book, because when you share them with me, I then go and do exactly that. And yeah, so something that's dear to my heart. I really do.
Yeah. Well, I've sort of got, I've got a playbook of 5 trades now, me personally, and I've got a set of rules around those 5 trades and a process trading those 5 trades as well. And as a result, I'm trying to build a library of those 5 trades as well, so that I just get used to sort of those sort of stats. Like there's probably 3 of those trades aren't that sporadic, so they're not going to give me a lot of stats. Yeah, so some of those setups don't, they only, you might only get, maybe 1 or 2 setups a month. Whereas the other, like 2 of the setups are probably going to be a bit more active. I'm hopefully going to get a few, I'm going to get a handful each week, and then I just try and hope to pick the best there. But just, looking for, pick sort of 7 out of 8 boxes is the minimum I'm looking for there. And with the position size that I follow, and then selling some into heat and then trailing the 20 or the 10, wherever it is. There's a similar basis of that. And then I'm really just trying to build a library of those trades in the past and see how those performed as well. Because you will get some that perform well and some break there. And the thing I was sort of seeing there, Chris, is that you just don't know which ones are really going to shoot the lights out. So you get the setup, and then you sell some in the heat, and you move the rest to break even. Some of them will fail and then come away, and you go, okay, it's a bit of a shame. And then others kick on and keep going. And you go, I didn't expect that one to really keep going as well. But if your process was to sort of sell half into say 3 or 5 days of heat, where you're saving maybe got say 2 to 3 times your risk, and then you move the rest to break even. And then if the rest runs and keeps running, you just trail it there. So really, I mean, I think I sort of read there recently there, I think with like in the was it Michael Cabell? It was one of the trend traders there was talking about the CT trend trading application. There was that 7% of the trades accounted for 100% of the profit.
So that's the 93% of the trade.
Yeah. So it's pretty interesting stat actually. Sort of like 93%. Obviously, you'll have, and of that 93%, you might have say half of them might get to say 1 unit of profit or break evens, or maybe 2, and then that gets broken out. Half of them will probably will stop out at evens or negatives. So that 93 nets out to be +1, 0, and -1 in terms of the settings. So it doesn't make any money over the term, but the 7% accounts for all the gain. So you don't know what 7% is going to be the one that really, is the PME or is the 360 or is the Finley. Yeah, is the is the Newix that just keeps running is the smart one, So, but if you do the same setup over and over again, you trade it the same way every time, you'll allow yourself that, to capture that type of move there. But you are not going to know what the which one is in the 7%. So it's pretty interesting there. Sort of, I know, like, if you read about Larry Hind as well. So if he talks about some of these principles as well. But yeah, it's interesting there. Just the last couple of names there. NP1, I thought this is one to sort of keep an eye on there. Did sort of something, very similar to NEU, and that did that false break there. I mean, this is something I used to trade, because I used to trade these these false breaks there when they washed out and returned there. But now I sort of only trade them if they're in the top half. I like to see them, so they've got to be at least in the weekly top half. And maybe you could argue that is in the weekly top half. But yeah, I prefer to sort of see them, to be a little stronger than that. That's a pretty deep pullback there. But MP1 has done something similar as well. Had a pretty deep pullback as well, but made that little false break and then reversed there. So you could buy that. I think some people look for that three. I think it's called the three ENA. So looking for like the 3-day average. So if you get a false break, I think this might have been the first day here or something there. So looking for a range break of that there, maybe either day 2 or day 3 there. Might have got a bit far away here on day 2. But yeah, looking for a bit of a range break of that. But I haven't traded this one here. I just because it's too deep, it doesn't sort of meet my requirements there. But it is on my radar there, because that's had a pretty good bounce of volume there, and maybe this will congest there. So a bit like the NEU, that had a nice impulsive rally, change of character, but we're now waiting for some sort of consolidation, some sort of flag or pattern or a tightening pattern, something like that. So they just go on the radar for me. Talking of EPs, I did trade a little bit of Paladin there. I did sort of see that news there. I thought it was a game-changing news there. So I just bought a little bit of this. I just working on my technique for this these strategies there. But yeah, it's had a nice little move there. The sector's pretty buoyant, and it's sort of coming up a reasonable level here as well. So did like that one. What else we got there? Yes, the BOE was on the list as well. So obviously same sort of sector there. Again, pretty buoyant there. Did do that false break again. So similar to MP1 and NEU, did go back and retest the low and come out of it there. So this was probably the first day we saw some really big volume come in. Then it did come back here. So yeah, I say, like, I've sort of tried to keep away from trading these false breaks, even though it would have been a good little trade. There's been 3 I've just shown here. But to be honest with you, Chris, a lot of these have failed here in the last year. It's because the trend, the momentum's been going down quite a lot here. We know that momentum's been the key all year. So we've seen these stocks just keep making these. So there's a false break there, failed. You might argue this might have been a false break, but again, it didn't quite get up there. But they're just, most nice. A lot of those false breaks were failing there the last year, just weren't working. And it took the ones that were working were the ones that were happening in the top half. So
Just while you're on the uranium names there was a request for LOT. I'm not sure if that was on your list, but we've got crammed the uraniums together.
yeah, it's a sort of small. It's just the volumes aren't really there. It's not moving as impulsive there. Sector's looking okay there. But you and I know we sort of want to trade the leaders there, and yeah, so not the laggards there. So yeah, but saying that, I thought Bannerman was one of the ones that did move early, and was showing some relative strength where a lot of them making new lows there, but it hasn't really kicked on. So it's been strong, but it hasn't kicked on like the others have. I think like Cleep, Yellow, and BOE have had stronger moves. So yeah, so deep yellow was a bit like Bannerman there. It had made a higher low, whereas I think Paladin and BOE went to new lows. So yeah, so deep yellow and Bannerman would have been the two that I would have been looking at. But I did look at Paladin just because that was the game-changing news. So I thought that was going to affect it there. And that's been drawn down to on some concerns. Yes, I knew that would really appease what was going on there, because I think there was concerns about how they were traveling. AUC, what happened for the last one there? Bit of a VCP sort of setting up here at the moment, but still hasn't broken here. So this is why you wait for a break here, because this could just break down and keep going lower here. But one to keep an eye on there. That's probably a bit larger correction than you'd want to see. But yeah, just one to keep an eye on there. But that's basically it, Chris. There's been a few trades out there, but yeah, just a little concerned about going to a new high here. So this is interesting. It's had like a little three-way pullback. Volume's been pretty strong here. Actually, that's the plus, is that volume's been pretty healthy there. I'm just still worried about this getting to that, I think, around a 61.40 is about 100% squaring, which is sort of, remember the Dow and the Nasdaq hit their squarings, but not the S&P. So it could square back out here. Might go slightly higher here, but yeah, I'm just worried about that. But look, we're in the fifth year. Sometimes this is when the market really can get going. Yeah, Trump's going to be doing everything he can to pump up the market. So this stage looks pretty buoyant there, but I'm just wary of this sort of broadening pattern, which is synonymous with the first quarter of fifth years and post-election years as well. So yeah, still trading a little bit lightly there. I'm not being too aggressive here at the moment.
Nice. Well, that's a lot of insights to share. Some great studies into how to be a better trader and analysis of the top momentum companies and launchpad leaders for this week. So to that end, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.